Rich, let's delve into the US dollar today. I was just discussing with my husband the other day what we're seeing and how the dollar is so strong compared to the pound, compared to the euro. Why is it so strong?
Yeah, there's no question it's strong. It's up 19% this year alone, Charlotte. That's the highest levels we've seen in at least 20 years. And some charts I've looked at, we haven't touched this rarefied air since 1985. So yes, the dollar's very strong and everybody's wondering why it is. There's a few reasons. We measure it relative to a bunch of other major currencies that are normal trading partners, the euro, the Swiss franc, the Japanese yen, British pound, Canadian dollar, and the Swedish kroner. Okay. And all the other currencies are being mismanaged as well. And people right now just tend to have more faith in the US dollar. They are seeing slightly higher interest rates in the US dollar. So that's attracting a little bit of capital for both return and for safe haven status. And believe it or not, right now, I think people are trusting that the Fed is going to pull off what they say they're going to pull off. And they may believe that, the markets and investors may believe that, but that's where they lose me.
Well, I know we're happy about it because we're going to the Azores in a few weeks. So, the USD compared to the euro is a good thing for us.
It's a great time to travel with dollars. There's no question. But long term, I don't see that lasting. Short term, great for those dollar-based.
So why are all other assets falling?
Well, because here in the US, what we're doing is we're raising interest rates. We're making it more attractive not to gamble in the big casino known as the stock market. We're making it more attractive to be safe and just earn a return on your assets. At least that's the mantra of the Fed. What most people are missing, though, is we're still looking at 8.3, 8.5% inflation, consumer product inflation. We're also seeing, somewhere between 8 and 11% PPI, producer price inflation, which has yet to work its way into CPI, right? So this is going to be with us for a long time. And, 2.5 to 2.75% is not enough to go ahead and stave off inflation. You're still got a negative real return on your dollar holdings. But again, right now, people are believing in that. And so the punch is being pulled from the party. No more punch, no more, spiked cocktails. And the market is deflating as a result. And we talked a little bit before we went on air, gold is deflating a lot less than everything else at a much slower pace. The NASDAQ's down 30% this year. Gold's only down 9%, despite that 19% increase in the dollar so far this year.
So what can people expect? When do you expect this to turn around?
That's a good question. It's on everybody's mind. I don't know that we're going to see it this year. I think maybe next year. But understand that this will turn around. We have no choice. The Fed cannot raise rates high enough to get on top of inflation, because if they do, they cannot pay the servicing or the interest on their $30 trillion debt. This is a big difference between what happened in the 70s and what's happening now. Now we have a $30 trillion debt. Back then we didn't. Volcker was able to get on top of inflation in the 70s. Powell and his team cannot do it here. I expect to see first a pause in the rise at some FOMC meeting or meetings, and then at some point I expect to see a pivot or a lowering of rates. And when that happens, we're taking off the governor on gold, and it should take off pretty nicely. I think short term, you may see lower prices in gold. Long term, you are absolutely going to wish you had bought here.
Now, overall, how does this impact gold?
Yeah, like I said, short term, we can see the prices ease back down, and I can still see lower prices from here this year and into next year. But the long term, these are incredibly attractive levels. Make no mistake, I don't know how much lower it will go. I know we're really low right now. So those that buy here are going to be patting themselves on the back, not kicking themselves in the backside in future years.
Yes, it's a good time, good price.
There's no question.
Yeah. Well, thank you so much for your insight today, Rich. Very valuable information for our readers.
I love joining you. Thanks and look forward to next month.